It's Friday, September 22nd, 2022. Markets all closed in the red today. I truly believe that these markets are beginning to reassess the situation, reevaluate, and maybe some of the hope now is fading away. Personally, I believe we have at least one more rate hike this year, possibly two. November could be 50 basis points, or we get one in November, one in December. Let me know your thoughts. Comment down below on that. But we're getting one for sure, possibly two. Now, I think the markets are beginning to realize that more rate hikes are coming. They're going to be higher for longer. And remember, we were promised, or not promised, but the Fed did say that we would probably see 4 cuts next year. They changed that Wednesday, to 2 cuts next year. Well, what stops them from going, well, maybe it'll be 1 cut, maybe it'll be no cuts, maybe it'll be 1 or 2 rate hikes in 2024. The markets are beginning to realize this, that everything these markets have been hoping for, that the Fed would reverse course, that the Fed would start pumping all this money back into the economy. It's not happening, and it's not going to happen. In fact, I think the Fed, which really has to bear a lot of responsibility for this mess, is going to have to get very, very extreme to try to get a hold of this mess and to clean it up. And it's going to be very, very difficult when you have oil prices skyrocketing, gas prices across the country going up. This is going to be very, very difficult. Labor costs going up. This is out of their control. And you have the U.S. government spending money hand over fist. So this is going to get really, really nasty. But another huge concern here now is going to be the housing market. We are beginning to watch the housing collapse get worse. Bankrate.com today, 30-year fixed mortgage rate, 7.75%. Let me repeat that. Go to bankrate.com, verify this for yourself. It's 7.75%. And by the way, if I said yesterday, when we were talking 10-year bond yields, if I said 4.96, I apologize. I misspoke. I meant to say 4.496. We did see the 10-year bond yield go a little bit over 4.5 yesterday. But at the end of the day, ladies and gentlemen, guess what? It is going to go to 4.96. It's probably going to go beyond 5%. But if I misspoke yesterday, I apologize. A couple people corrected me on that yesterday. So I apologize if I misspoke. I didn't mean to say that. Yes, it was 4.496, not 4.96. But getting back to what's happening here, this article really stood out today on CNBC. Credit card losses are rising at the fastest pace since the great financial crisis. Credit card losses currently stand at 3.63%. Goldman Sachs says they see this number going to 4.93%. Americans now, as most of you know, owe over $1 trillion on their credit cards. The average credit card rate now is well over 20%. And we're going to continue to see this debt continue to climb as people have used up all their savings, they've used up their retirements, and now all they have left are their credit cards. I really wonder, what would this all look like right now if people did not have credit cards? There's still people out there that believe everything is okay. How can everything be okay when we just surpassed $33 trillion in national debt, 43 million people on food stamps? Right here in California, we're paying an exuberant amount for gasoline. You're seeing oil prices now $90 and change a barrel. Everybody's striking. UAW strike has already costed the U.S. economy $1.6 billion. Company losses came to $511 million. Lost direct wages, $107 million. Consumer and dealer losses, $470 million. And this is more than likely going to push the prices of new cars up. So if you think they're expensive now, they're probably going to go up. And again, you're going to see less new cars, higher prices, and less qualified buyers. You know, somebody wrote yesterday saying that, oh no, home prices are going to continue to go up because there's no inventory. These people don't get it. When the bottom line is this: when you don't have a job, when you have mortgage rates now approaching 8%, people cannot and will not buy homes. Inventory is out there. It's the shadow inventory. It's coming. You're going to see the Airbnb properties, the short-term rentals, the vacation homes, and all this new construction hitting the market on top of people who are going to run to the exits because they've lost a job. Inflation's crushed them. They're going to have to sell the house. They bought too much house that they could afford. A spouse lost a job. They're getting a divorce, whatever. Life happens. You're going to see more and more properties hitting the market. So these people who just want to say, well, there's no inventory, so prices can't come down, they're absolutely wrong. There is inventory. It's coming. And the bottom line is, when you don't have a job, or when you have a debt to income ratio like this, where half your money is going to a mortgage, it's completely 110% unsustainable. It's not going to happen. People cannot continue to do this. They're one accident away from big, big trouble. And many people are beginning to realize this right now, especially people with the vacation homes or the short-term rentals. They're beginning to realize this. And all that has to happen is for you or a spouse to lose a job. That's one income gone. And you know it takes two incomes to afford all this, and you got big trouble. And we're going to see big trouble. So look, you can believe this. They also say, hey, the experts are saying that, JB, there's not going to be any housing crash, the inventory. The same experts that told us back in 2000 there would be no housing crash. Exactly. The same experts. The problem is with these people that comment and say this stuff, you're listening to the so-called experts who have been wrong about everything. They were wrong about the last housing crisis. They were wrong about the last financial crisis. They were wrong about interest rates going up. They kept telling you they would never go up. They were wrong. They're going to be proven wrong again. You don't need a rocket scientist. You don't need to be a rocket scientist or an engineering degree or a degree in mathematics to figure this out, ladies and gentlemen. We've seen this movie play out before, but when you have debt to income ratios like this, when you have people losing jobs, when you have strikes upon strikes, you have uncertainty geopolitically across the globe, you have this much debt, you have the consumer tapped out, over $1 trillion in credit card debt, a savings rate of 3.5%. I mean, it just goes on and on and on. I mean, this doesn't take a massive business degree to figure out. UAW strike spreads to more GM, Stellantis facilities, Ford spared amid progress in talks. We now have 18,600 workers on strike. This country is a mess. We have a massive disaster going on. And here's another strike. More than 75,000 Kaiser Permanente workers threaten to strike if labor agreement not reached. Kaiser Permanente has 13 million patients. Workers will strike the first week of October if they do not reach an agreement. So think about now how much longer it will take to see your doctor or to have that surgery. If you think it was taking too long now, wait till you see what's coming. But here we are. I mean, we have all the automakers striking. Now Kaiser Permanente is threatening strikes. It's just unbelievable. There's just so much volatility going on right now. This is why I totally think it's a horrible idea to make a big purchase item, especially a home purchase, because we don't know what's coming and how bad this is going to get. I would hold tight, keep cash on the sidelines. Somebody said, oh, well, cash, why would I hold cash? You need some cash. Look, I get it. Inflation is eating up cash. Yes, you should have barterable items. You should have gold. You should have silver. You should have food and water and all that. But you should also have cash. Why? Because when the deals pop up, you can jump on them immediately. So you might be paying a little bit upfront with inflation. But when things go on sale, 30, 40, 50, 70%, you'll be glad that you have some cash. Have some cash until you don't need it. Gas prices near $6 a gallon. This on Fox Business today. So right here, gasoline prices are up 29 cents in the past week, up 54% from last month to this month. Alpine County, California, gas now is nearing $7 per gallon. Now, somebody please comment down below and explain to me, how in the world are people doing this? I was talking to a friend the other night. We were just talking about, just going out to dinner to just a decent restaurant, nothing fancy. 2 people, it's going to cost you $80 plus tip, $100 just to go to a just decent restaurant. Nothing, not a fancy steakhouse or seafood restaurant, just a decent diner. It's going to cost you with tax and with a tip, about $100 for 2 people. How does a family afford do this? How are people commuting to work out here when we're paying about $6 for regular? We're approaching $6.69 to $6.79 for super. And a lot of cars require super unleaded. How are people going to continue to do this, especially commuting to work? How are businesses doing this? Businesses that have equipment, trucking companies, heavy equipment, people that have businesses that require, small vans, small trucks. I mean, this is really taking a toll on the U.S. economy. Now, we spoke about this many, many times. There was an article in the Daily Mail last night that I found pretty interesting. And we've continued to talk about this. Like, look, we can talk and walk around all day and talk about how bad things are and, the critical condition of this economy. But we have got to continue thinking about solutions. We do not want to be a victim of this economy. And I was reading this article last night on Daily Mail. Get this, new CDC data shows record 40% of adults are obese in 3 states. West Virginia, Louisiana, Oklahoma. 19 states had rates over 35%. Some of the lowest states of obesity, Hawaii at 25.9%, California at 28.1%, New York at 30.1%, Montana 30.5%. These are the lowest rated states, the lowest rate of obesity. Think about that, 25.9% in Hawaii, that's 26%. California is at 28.1%, that's almost 3 out of 10 people obese. New York, 30%, that's 3 out of 10 people. Montana, 30.5%, that's almost 30, that's basically 3 out of 10 people, almost 31%. You must be getting in better physical shape. Now, really quick, they had a map, a graph of these states, 10 years ago, 15 years ago. And when you look at how far we've come with obesity and the increase of obesity in the last 10, 15 years, it's astonishing. We are so unhealthy. Heart disease, diabetes, high blood pressure, kidney disease. These are the things you're going to get if you don't start getting in shape, eating better, exercising, taking care of your health. This is costing the healthcare system $173 billion per year. 647,000 people die each year because of these type of diseases that are related to obesity. We're heading into very, very tough times, ladies and gentlemen, very, very serious times. You don't want to be dealing with these issues, heart disease and diabetes and kidney disease, high blood pressure. People are going to be put under a lot of stress right now because of job losses, financial problems. And if you're obese, overweight, and you're taking on all this stress, this is really going to magnify these problems. This is really going to accelerate the rate of diabetes and heart disease and all this stuff. And so I want everybody to really take a little bit of time out of their day, do a little bit of walking, join a gym, start learning how to fight, get on the mats, do some jujitsu, get into a boxing class. You got to get off the couch. There are no excuses. You can prepare all you want. You can save up as much cash, gold and silver. It's completely worthless if you don't have your health. I mean, next to God, health is got to be your number one asset. I mean, it doesn't matter how much money you have. If you are not healthy, what's the point of having it? So if I can give any solution today, any bit of advice, get your body in shape. You're going to need it. We're heading into tough times. People are going to really be put under a lot of stress. If you're in better physical shape, you're going to handle that stress much, much better. So that's a little bit today of advice I can give. That's a solution right there. Shifting gears here, the economiccollapse.com. Almost half of all young adults in the United States are living with their parents. We now have millions of young people completely struggling financially in this country. They have piles of student loan debt, piles of credit card debt. They never considered the consequences of taking on this debt. And now they're living in the real world and reality is setting in. And they're understanding now that the cost of living is going up. They can't afford it. They can't pay down their debt. They're struggling to feed themselves. They can't put a roof over their head, so they're forced to go back home. A lot more people, not just young people, are going to be forced to make some drastic decisions. And I made videos 2-3 years ago talking about the numerous amount of cars parked in driveways, parked out in front of homes, garages that were being converted into living spaces. This was 3 years ago. This is now on steroids. This is now becoming very, very common. People living in garages, people moving back home, people moving in with relatives, people taking on roommates. People now are going into survival mode. It was beginning 3 years ago. Then there was a break because of the $7 trillion that was injected into the economy. Well, that's all been absorbed. That's all been used up. Now people are right back where they were and even worse. They have more debt than they even had before. So the shopping spree's over. The money's run out. People are losing jobs. Inflation now that was caused by this massive artificial injection of cash. Now we're paying the price for all of that with inflation. And people didn't realize that there's nothing free. You don't get $7 trillion and not expect problems. It's not free. Now we have inflation. This is why you're paying so much at the pump. This is why you pay so much when you go to the grocery store. This is why you're paying so much for labor. It's going to get worse, and people are going to have to make some serious decisions here. And I'm going to give a little bit more advice today. So many people are in this situation right now, but pride is in the way. They don't want to give up the zip code. They don't want to give up their independence or their freedom by having to move back in with their parents or take on roommates or move in with in-laws. I think now that we're at this point, a lot of people, my advice is get rid of the pride, do the right thing. If this is what you have to do to pay off the debts, if this is what you have to do to build up the war chest, to build up cash capital, then that's probably what you have to do. I think that you're probably better off as a group than trying to do this by yourself. I think that if you have the opportunity to move back in with family and fiscally it makes sense, I just think that everybody working together and coming together, I think you're going to be safer. I think you're going to pay off debt quicker. I think you can raise capital quicker. And I think it allows you to breathe a little bit and take some of that stress off. And, just think, it's not going to be forever. But right now, this may be an opportunity. And I think, again, families coming together, helping one another out, your chances of survival and getting through this are going to be much greater. But there will be people out there that just cannot swallow their pride, who are going to try to persevere through this. They're going to get deeper into debt. They'll end up losing a car or being evicted, and it's going to be a big problem. But I think right now, people have got to make some big decisions. Maybe it's time to get rid of the cars you can't afford. Maybe it's time to get rid of the condo that you can't afford. Maybe it's time to downsize. Maybe it's time to move back in. Maybe it's time to get a couple roommates. You really got to be thinking about surviving now. And again, a lot of people will absolutely ignore this, but a lot of people aren't, because they're doing it, and they've been doing it for the past few years. But now we're seeing it happen at a much higher rate than we did 3 years ago. It's becoming more and more common to see 4, 5, 6 cars out in front of the house, and multiple people living in a house right now. I think that's the only way a lot of people are going to get through this. I really believe that. So don't look at it as a negative. Maybe, there's a couple real positives here, but this is what it's coming to. And hopefully this isn't going to be permanent, that, we're going to have 8 people living in a house in order to live the American dream, because, prices have gotten so expensive, and mortgages and rents have gotten so expensive that, now you need 4, 5, 6, 7 people in a house to pay for the rent and the mortgages. Hopefully we're not going to get to a point to where this is common. This is why we must have a collapse. We must see a market collapse in housing, the stock market, the bond market. We need to get real valuations, true valuations of these assets. Homes should not be this expensive, ladies and gentlemen. No way. There's no way a home should be 10 times what your income is. It just should not be. The rule of thumb was about 2.8, 3 times to 2.8 to 3 times, not 10 times. And people are paying 40, 50, 60% of their incomes, of their gross incomes, to a mortgage payment. That's unsustainable. And so we've got to see something break here and get prices back down to normal, or this is going to completely decimate the middle class. And 90% of the middle class is going to be living at home. A couple articles I'm going to end with here. This first one from The Hedge. Lawlessness spreads to suburbia. Westport man carjacked in own garage. This happened, I don't know, about 4 days ago. Many of you probably seen this on the news or online. West Point, Connecticut. This man was followed home, pulled into his garage, a convertible Aston Martin, and 2 gentlemen jump on him, assault him, drag him out of the car, and take his $200,000 Aston Martin. Another solution today I'm going to give you, because people say I don't have any solutions. So this will be the third solution today. Know your environment. Put this down, when you're driving. Look in your mirror, especially if you're driving a nice car. Might even be a Honda or a Toyota. Those are very popular. Know your environment. Scan and assess at all times, whether you're driving, whether you're walking, you're leaving your house. Scan and assess. Costs absolutely nothing. That's another solution that could save your life, prevent your Aston Martin from being stolen. This gentleman more than likely wasn't paying attention. Again, who knows? Maybe he was on this driving and didn't notice the car following him for the last 10 miles. Nothing's safe. Nowhere is safe now. So you're in your own garage in your beautiful home, and you're assaulted and dragged out of your $200,000 plus Aston Martin. Be aware of your surroundings, ladies and gentlemen. And if you're out there training and you carry a tool and you have the permit to do that, might have been a whole different outcome. I'm going to finish with this last article. Here we go again, ladies and gentlemen. The 49ers football game last night versus the New York Giants at Levi Stadium. I was watching this this afternoon, and maybe some of you have seen this. If you haven't, you can Google it. But 2 women, here we go, 2 more women fighting, adult women, and a man jumps in, grabs one woman and pulls her down to the ground, and the other woman is attacking the woman, and then this gentleman tries to punch one of the women, then another man jumps in and tries to assault one of these women. And I can't even believe watching this, another football game. It's just another reflection of the society that we're in. But now you have men trying to punch women at the games. And this isn't the first time it's happened. I realize that, but it's becoming more common. And so, if you're a woman, realize this. You may be on your own. Don't expect a man to come to your rescue. More than likely, they're just going to be filming it with a phone. But no man is going to come to your rescue when another man is assaulting you. So it's just shocking to watch what's happening at these football games with adults, with women. It's quite shocking. It's really embarrassing to see how far we have fallen as a society. And it's another reminder as we head into the weekend, as markets down yet again today, more economic bad news. We are getting deeper into this depression. Bad things are happening. And there's a lot of things I could talk about, but I don't get political here. You know that. I wish I could, but I don't. There's a lot of things happening politically. There's a lot of things that are going to affect this country that I really cannot talk about here. But when I watch our own society right here, this violent at a football game, I have to take a second and ponder, what is this going to look like when people get hungry? What does this look like when people lose pensions? What does this look like when people lose jobs, when people have hungry kids? What are these people going to be capable of doing if they're already capable of punching women, assaulting people at a football game for just being at a football game? What are these people capable of when they get hungry? think about that this weekend. Comment down below. Let me know your thoughts. Please like, please share, please subscribe, and please, ladies and gentlemen, be careful out there.